2022 was definitely a tough year for a lot of investors. And depending on who you ask, 2023 may be even more challenging. However, here is how you, as a young investor, should feel about investing in the market going into 2023. Welcome to another edition of the McEnulty Method. I'm your host, Bill Vashwick, joined by financial experts Frank McEnulty and Colin Sorrells. They're here to give you all the tools to build a successful financial future. Gentlemen, how are you?
Great, Bill. How are you?
I'm doing well, doing better now.
Good to be here. Good to be here.
Now, as I mentioned in the brief introduction, 2022 was not the most forgiving year for many young investors. And there is a lot of talk that 2023 may be just as painful. However, we've put together some data that hopefully will paint a more complete picture of what the heck is going on with the market. So, gentlemen, I hope give us your take on what we can expect in 2023.
Yeah. So we did a little bit of research to kind of take a look at, 2022, as you mentioned, really, really bad year, right? If you just look at a lot of these returns, oh my gosh, I'm down, the market as a whole, I'm down 20%. This individual company is down 70%. It feels terrible. But we did a little bit of research to bring up the returns of 2022 compared to, and this is more of an 18-month span, but what I sort of dub as the COVID return. So sort of looking at the returns from when the market hit the bottom in the middle of March and then all the way through to the end of December of 2021. And I think one of the things I want to point out is, there's a lot of headlines about, well, the market's, it's terrible, everyone's losing money, and you have a lot of people who are just, they feel bad, they're taking the loss. But I think one of the things to show in this first graph, when you're looking at key sectors in the S&P 500 is, you're seeing some of where your tech companies might be. If you look at your information technologies, your communication services, consumer discretionary, these are where your Microsoft, your Amazon, your Tesla, these sort of tech companies that maybe get classified somewhere else have been hurting, but you can see on the green part of it that, during COVID, the returns were just huge on these companies. And, you can see the losses, you're taking in a vacuum pretty big hits, but relative to the returns that you were getting in COVID, and Frank, I'll turn over to you quickly for this point, but Frank, why don't you make the point about that? Looking at the big returns and then the little losses, because I know you want to talk about that.
Well, there's a couple ways to look at it. When everything was going down, you say, oh my God, it's horrible. It's going down. It's going down. It's going down. And I don't want to say I was lying to myself through statistics, but I go, if I look at my portfolio from the beginning of 22 till the end, it's not good. But if I look at my portfolio from the beginning of 21 till the end of 22, it's up. So yes, it went way up. Yay, everybody feels great. Then it comes down, but it's still up overall. And mine, quite honestly, is up about 18% over those 2 years. So, that's not bad. And, everybody's favorite stock to talk about and watch is Tesla. And yes, Tesla has had a huge run up. It went up, I believe, around 1,100%. So it went up 11 times. So think about it. If you own Tesla at $100 and it went up 1,100%, now it's at $1,200. Okay. And then it went down 70%. Okay. So now it went down $840. So you're still at 360. So you still went from 100 to 360. There's nothing wrong with having a stock almost quadruple in 2 years. Yes, it's not as exciting, not as good as, 11 times, but 11 times was unsustainable. It's sort of like the housing prices. The money was so cheap out there that people were borrowing money and just buying everything. So they ran up the prices. now they're getting back to maybe where they're more sustainable. And I think, quite honestly, a better place to invest, because you don't have to worry as much about everything being hopelessly overvalued, and it can only go down. So, of course, if you bought Tesla at the, when it was way up here, with the 1100% gain, yeah, it's been a very bad year, and some people did that. But that's why, once again, we talk about, how do you invest? You don't just say, okay, I'm putting all my money into Tesla today, I can't wait any longer. No, you go, okay, I want to invest in Tesla, I want to invest in this, I want to invest in that. Well, I'm going to put some in each month and get that average, dollar cost averaging. Because remember, we're investing for the long term. We're not investing because we're going to need the money in 2 years to buy a house or to retire. We're investing for the long term.
No, and I think you make a great point, Frank. If we look at sort of the top 20 companies, I know you're talking about Tesla. Um, maybe a better way to look at this market, especially as a young investor, is you achieved all these gains, and I mean, we know from when everybody kind of had to quarantine during the pandemic, what took over the internet. Oh, I'm going to Robinhood, I'm going here. Everyone was trying to fancy themselves a investor in the market, and I think you have a lot of people, especially and you can even make this case for the past decade. So you end up with a lot of people who, if you're 30 and under, have never really seen a severe market correction. And I think that's more of the way to look at this. Maybe this isn't the world's going to end. I know that's what makes the headlines. The market's collapsing. Everything's going down. You need to get out now. Things are going to get worse. But if you're in it for the long haul, which I think most of the people we're talking to are for the next 40 years, this is a correction. This is what happens when you buy stocks up and up and up. And you can see, as you look at, an Apple up 200% during that same time period we talked about, from the bottom in March to the end of 21. Microsoft 154%, Amazon 100%, Google 170%, Tesla 1100%. That's not sustainable forever. And I think, Frank, you made the excellent point that not only should you not feel terrible about this, because this is just a correction, these companies aren't going anywhere, this is probably a great opportunity to continue to invest, to put more money into the market and continue to hold into the future.
Well, yeah, if you look at your top 20 companies in the Standard & Poor 500 by weight, and I haven't done all the math on these, but really over the last 2 years, they've all well outperformed historic trends in the market. I mean, even, you've got NVIDIA, okay, it went up 500%. Then it went down 51%. Okay. So it went up 250%. That's scary that it went up 250% for a large company like that. It's, my opinion is there is still a tremendous amount of money out there floating around, chasing everything, because we and the rest of the world printed way too much money. And that money's got to find a home. And the stock market, the US stock market, is it for most people. It's the best place to do things. And so I'm not worried about a collapse, quite honestly. I don't see it happening. And because the economy has not collapsed. Remember, stocks are based on what they can potentially earn in the future. And I know, we still have, everybody, that the media loves, things to go wrong. If everything's right, they might as well stay home. But, they're all, well, we've never been able to get out of inflation without a recession. We've never been able to do this without a recession. They're going to be so disappointed if we don't have a recession. It's, and they're right. We may have a slight recession. I don't think it's going to be that bad, for the same reason that there's so much money out there. All we hear about is such a tight labor market. people can easily get jobs. So I'm not exceptionally worried about it.
Oh, yeah, and I think it's a great opportunity. And even if you're even still hesitant, even after everything we've said about, going after, maybe it's a good opportunity to get these companies that have dropped, you bring up all the money that's still out there. And even if you take the loss into account, the returns you still have. But even if you really want to be in active management, we're not going to sit up here and recommend any one company or not. But just as an example, if we look at the top 20 and we look at an Exxon or a Chevron, they're in the energy sector. If we go back to, and if you look at the chart showing just kind of 7 key sectors in the S&P 500, you can see energy has still had a positive return in 2022. And I say that to make the point, if you really, do a little bit of research, there are even opportunities in these markets. Everything's not bad in this market. There are opportunities to make gains.
Well, and they say that if China finally comes out of lockdown and gets their economy going again, oil's going to go blow right past $100 again a barrel. So who knows?
So there's opportunities.
Right. The important thing is, though, I was just talking with somebody earlier today about how much they could put into their IRA this year. It's been raised to $6,500. So let's say you plan to put $6,500 in your IRA this year. Okay. I'm not going to say the market's gone down as low as it has. I mean, it had a bad day today. It had good days last week. I don't know. But so you're gonna put the maximum amount in your IRA, hopefully a Roth IRA, especially if you're young. And so you're going to put $6,500 away this year, which is, we divide by 12 is $548 and change per month. So my suggestion would be put $548 a month into your investments. This month, next month, the following month, pick a day of the month and just put the money in. You're going to do it on the 15th of the month every month, whether it's an up day, a down day, because if you were so good that you could pick when it's going to go up versus when it's going to go down, well, you wouldn't be listening to us anyways. You'd be on that beach in Aruba having a good time.
I think
but maybe you are that smart. I'm not. I just have to put it away constantly to try to get a nice dollar cost averaging and not just accidentally buy Tesla at its all-time high. Do I know if Tesla is going up or down from here? Nope, I do not. But maybe there's a fund out there that has Tesla in it, so I have a little exposure to it, and it has. You'd be surprised. You could probably get a fund that picks these top 20 stocks and has it in.
Speaking of which, I'm thinking that this might be a good place to end this today, because the next time we all get together, we want to talk about why young investors should start investing yesterday. You guys have already teased us with a couple of good points, but I think we'd like to hear a little bit more about why now, as bleak as the media paints the whole economic picture, why now might be a good time to get involved. So next time, I can't wait for you guys to take a little bit deeper dive on why this is a great time to start investing. And for you watching this video, if you want to learn more, you can check out our YouTube channel at the McEnulty Method, or wherever you watch your podcasts, or wherever you're watching this. So until next time, guys, thank you very much.